Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond. Welcome aboard. I hope you had a great weekend. And we have a lot to go over. We're going to kick things off first with the futures action. Then we're going to talk about the tax deal, what that means for you and inflation. Earnings trades last week. We're going to go over our trades. Outstanding week last week that we had. We're going to try to repeat that success this week. Economic data. We're also going to talk a little bit. We've done this in the past. We're going to keep doing it. The self-inflicted damage that this government appears to continually want to do to this economy. And of course, we're going to leave it off with stock chart requests. If we have time, we'll circle back. We'll see how the futures settled out. We'll go to about 7 o'clock tonight. So let's kick it off. Let's go over to futures action. Let me share my screen. And then, of course, we'll say hello to people. We'll allow things to settle down. Okay. And there we go. So we're kicking things off with the S&P E-minis. This is a 4-hour chart. These will all be 4-hour charts unless I say otherwise. So we are down about just shy of a quarter percentage point. It's going to take a while for things to settle down here, so we don't want to read too much into the opening price action. Oh, Fat Falcon. Hey, brother. How's it going, pal? Larry. Hey, Bob. This is not a chart request, just a heads up on IBM. It's on sale if you want income. Options or dividend, Larry? I'm interested. I want to hear your thought process. Always interested in new thoughts. Franklin, Bob, good evening to all, and let's get ready for a great week of trading. Absolutely. Joseph, hey, Bob, well, evening all. Evening to you, my friend. Welcome aboard. Okay, so that's the E-minis, down just shy of a quarter percentage point. Let's stick with equities. Let's go to the Russell 2000. They are down just over a quarter percentage point. So what I want to do here is do what we normally do and start setting up some lines in the sand, because once these get triggered, if these get triggered, then we know that we have a little bit of momentum in one direction or the other. So on this 4-hour chart, I want to know whether or not we take out the lows of Friday. We do still carry a short position on the small caps. Now we're down just shy of a third of a percentage point. Moving on to NASDAQ 100, which we also have a short position on. It is down 0.17%. So doing less worse than the other indices. So as with the Russell, let's get our alerts set up. Okay. Excuse me. Okay, so equities, a little bit of pressure. Hey, Bo. Hey, Bob. Hope you had a good weekend. Same to you, my friend. Same to you. IBM yield, 5.1%. Very interesting. I see. Okay. We will go over that chart because that might be one where I don't know when the ex-dividend date is, but if it's already passed, then that might be one where you want to sell naked puts against, because you have a couple of months before the next ex-dividend date. try to have the shares assigned to you at a lower price, adjusted for premium. So that may be one strategy for IBM. So we'll take a look at it, see how it looks on a longer term view, because the 5.1% dividend may be sexy right now, but if it appears that we're going to go lower on IBM, then that that dividend gets eroded a bit, and it may not appear as sexy. So we'll take a look at the chart. We'll formulate a game plan. I like your thought process, though. Good stuff. Oh, OG1 Kenobi. What's up, buddy? How you been? Doing good, pal. Hope you're well. I'm in crypto, HIB. Could you help me with a little TA? I'll try, my friend. It's HIB? Okay, we'll give it a shot. All right. So those are equities. We went over equities under a little bit of pressure. Let's circle into now the currency markets. The dollar got whacked last week, and that was good for us. Now, what we're looking for is a new lower low. The low of the week last week was Thursday. Okay. And I also want to know, do we put in a new daily low? So the dollar remains under a bit of pressure here. Okay. So it's early. We'll see how this shakes out, but certainly under a lot of pressure, the US dollar. Oh, the Japanese yen last week had a nice rally off of its lows, but let's face it, there's been a lot of damage done here. I don't think we're going straight up. Rarely does that happen. The euro, very similar in that a lot of damage has been done. It had a good week. Now, the euro is looking a little bit more promising. And keep in mind, the reason why we focus on the euro and the yen is because when we are buying or we're long of gold mining stocks, silver, etc., we want a weaker US dollar. That helps us. So we want to see the euro strengthen up because the euro is the largest component that trades against the US dollar in the dollar Dixie basket, the yen being the second largest component. So that's why we focus on these two very critical currencies. And the euro broke out on a 4-hour time frame on Friday, and it's holding there. So I want to know if the euro breaks out to a new higher high. Oh my God. I have two keyboards here. They're all overlaying each other. I got to redesign my office. Too much stuff going on here. All right. So now that we know that, we're seeing strength on the euro, strength on the yen, and a bit of pressure on the dollar. Now we're ready to take a look at commodities. So let's begin with, whoop. Come on, Bob. You can do it. There you go. Let's begin with copper. Copper just ripped last week. And then it began to fall apart. Home heating oil up. This is going up. This is going up. Look at this consolidation. If I was a futures trader, I'd be looking to buy home heating oil futures right now. I just may do it. Taking a look at where's my gold? I had this all prepped. What happened? Gold. Gold is down on the session despite the weaker US dollar. Now, gold had a very, very good week last week. It did close off the highs of the week, but we flirted with that 1800 mark for the first time in a while. So you'll know when it's game on for gold once we close above 1800 to 1810. Watch that number, because once that resistance level becomes support, you're going to see magic happen in the gold markets. So buckle up. Buckle up. Silver. Silver looking good. It's down on the session, but we broke out of this trading range. I mean, we've been in this trading range for quite a while. Now we are out of it, and it looks as though we're going to move a lot higher. I think we were up, what, about a buck on spot silver last week? That's a huge, huge move. Rice coming in a little bit. We thought that was going to break out. Oats looking very good. Soybeans, weak, very weak. Natural gas. We need to do oil as well. Natural gas, it's had a pullback. It's come off of its highs. Now it's consolidating nicely. So natural gas, this may have been the correction that we needed. Some of that froth was taken off. Now we're looking for new higher highs. In fact, it looks like we gapped up here this session. We may fill this gap, but nat gas looking very good. Let's take a quick peek at the price of light sweet crude. I mean, what's not to like here? Unless, of course, you're the consumer, and you're at the gas pump. This is going up higher, folks. You know, there was I wanted to have that ready for you. I should have had it. I pulled up the spreadsheet. You know, Baker Hughes is a offshore rig driller, and they come out each week with the number of rig counts that they have out. So, you know, if you're the president of the United States, and this really speaks to the leadership that we're seeing right now in this country, or the lack thereof, you would be on the phone with the CEO of Baker Hughes saying, listen, man, you got to get some rigs going offshore here. So the rig count, despite the fact that we're seeing higher highs on oil prices, you would think that they would have a rising rig count. The rig count actually last week declined by 2. So what is going on? It looks as though it's a self-inflicted wound, and that they want higher energy prices. Why? Because if you ever take a look at a chart of oil prices relative to solar, renewables, they generally trade in tandem. When you have lower oil prices, well, there's less incentive to invest in renewables. It's simple as that, because they're more expensive. They're not as efficient. But as oil moves up higher, that cost per kilowatt becomes more attractive. So that's why I think that they're allowing oil to move up higher to drive more investment into renewables. And don't get me wrong, I'm a big fan of renewables, but they're not ready for prime time yet. You don't chop off your nose to spite your face simply because you have an agenda to pull. It's craziness. I digress. Let's go to comments. Michael, hello. Bob and Contrarians, Tesla topping or surging? I opened up a naked put. We did well last week on Tesla. We traded at earnings. We did very, very well. In fact, I rolled up the put side, the naked put side, not once, but twice. So we did very well. I did reopen a weekly naked put going into this week. A weekly naked put is a put right. So it's a bullish trade. Sometimes when people hear put, they're thinking I'm bearish. No, I think that Tesla is probably going up higher. Elon's options should be expiring in Q4. Get ready for fireworks. Good point. Tom Liu. Hey, Bob, your view on GE, the future of MedBed and Kodak, 6,000 patents for future energy. From a fundamental perspective, I have no clue. I could give you my perspective from a technical perspective. Randy, mouse without borders is good for using a mouse and keyboard. Busting my balls on my desk. Multiple network computer, if that's is your issue. My desk is a mess. That's what it comes down to. I have so much going on. I do plan on, for those that have been inquiring about having the morning shows, I plan on resuming them. I have a lot going on right now, trying to expand the business, working with a lot of people, and I have so much up in the air right now that it's overwhelming. So more to come on the future as they become more and more clear, but it's going to be cool. Jody, hello to you. Welcome. Talon, hey, brother. Good to hear from you. Well, smash the like button. Yes, smash the like button. Yes, please smash that like button. Subscribe. Tell a friend. Michael, reiterating, like it, smash it, love it. Yep. Falcon, did you mention that they were going to divulge a little of your DW? Did you mention you were going to divulge a little on your DWAC trade? Well, I did a video on it today. So there's a video on DWAC. I posted it on YouTube, shared it on Twitter. It's out there. What I didn't do was share where I plan on re-entering. Also, from what I understand, my son just reinforces. Somebody mentioned it on a comment on YouTube that they're going to be issuing options tomorrow. And I had heard that earlier. Then my son just reinforced it. So it looks as though they're going to have options out there. So I will definitely be in the options market, but I will not be the buyer. I will not be the gambler. I will be the casino. I will be selling those options because they're going to be big and fat and worth a premium. So I want to get back in, but I want to get back in at lower prices. So what I plan on doing is selling options, selling that put option to try to get my costs down. And I'll tease it. I'm going to go over in a little while where I'm going to plan to place those strikes. So stick around. Bob, I'm in BENE. If you have time, brother, I will. I'd like to hear your opinion. Just nibble on some shares Friday. You got it. GE will be my wild card and Medicare play. They should have a ton of patents. So I'd be interested in hearing what they have to say. I know in the machinery, they've been big players in MRI machines and whatnot. Randy, I sold some puts on Tesla again too. Feels like 1,000 is coming. Yeah, you know what it is that you get in that neighborhood of a big round number has a tendency to go to that big round number. So I would be a liar to say that besides the technicals, that anecdotal piece of information was or that observation, not information, that goal that somebody out there wants to be that first guy to buy at 1,000, sell at 1,000. We're going to 1,000 on Tesla pretty shortly. So that's why I felt pretty comfortable, along with the technicals, to go selling some naked puts on Tesla. All right, let's head on over to M. McNeil. Dizzy, if you have time. If we have time, brother, I will. I'll scroll back through these. If I don't remember, remind me, okay? I'll scream out which ones I'm going to go over. If I miss, please let me know. But I do need to go to members first, so I have a bunch to go over. All right. Let's kick things off with, this is the FDIC chairman.
We're living in unprecedented times. At a time of a pandemic like this, it is way too easy to get confused and to have fear about what you should be doing with your money in your accounts, especially as you're looking at the volatility in the stock market and the financial sector. This is what I would like you to take away from this. Your money is safe at the banks. The last thing you should be doing is pulling your money out of the banks now, thinking that it's going to be safer someplace else. You don't want to be walking around with large wads of cash.
Okay, we don't need to watch the whole thing. You kind of got the gist of, when you have the FDIC chair coming out saying you don't need to pull your money out of the banks, something is amiss. You do need to pull your money out of the banks. You know, they want to say, she goes on here and she brings this up. Since 1933, no depositor has ever lost a penny of FDIC insured funds. That is a quasi lie. So, has the FDIC lived up to its obligations for defaults of FDIC insured banks? Yes, they have. The however is, and where she is an absolute crony of the federal government, is that what they're not telling you is that, adjusted for inflation, if you keep your money in the bank, adjusted for not sales tax, income tax or capital gains tax and inflation, you are losing money. If you're going to make 0.5%, you're going to have to pay taxes on that 0.5%. CPI is at 5.6%. Give me a break. If you keep your money in a savings account or a checking account for any length of time, it's insanity. You got to pull it out. That's the greatest lie of all time. What are they getting around to? The tax cuts, or the tax increases, I should say. Kristen Sinema, Democratic senator, appears to be, typical politician, in that she's got a constituency to represent, and that is, and thank God for her right now. Thank God for Kristen Sinema and Joe Manchin, both Democrats. She is holding up the spending bill that the Democrats want to push through the left wingers, and it is just transformational. It's just an absolute and utter nightmare. Now, what they want to do is raise taxes to help offset and pay for it, and they want to raise taxes on people making money $400,000 and up. That's nonsense. It never goes that way. That's your talking point. It'll go to reconciliation. That number will get dropped down. Not to mention what you're going to have to pay out in inflation tax, the hidden tax. So she's going to hold this up until and they really have no other choice. All she's got to do is hold firm. They're done. They've got to roll back these high increases in tax hikes. And this even applies to, she's from what, Arizona, Nevada? Arizona. And she's looking to preserve the tax benefits that the hedge fund community benefits from. So she's going to bat for the hedge funds. Go figure. So what does that mean? Does that mean that, oh, Jesus, the fiscally conservative left wing of the Democratic Party, I guess they can't have all these spending programs if they don't get the tax increases, right? No, don't be silly. They're just going to go to the Federal Reserve. The Federal Reserve is going to print the money. They are not going to pull back one penny on spending unless Joe Manchin holds firm, and they are going to print this money. So in a way, and this is really me talking up my gold mining trades, silver mining trades, silver trades, in a way, the increase of taxes on the wealthy, anybody that's working, would have been less inflationary than if they didn't raise taxes. But no, what they're going to do is they're going to print out of thin air the money. And last week, we just skyrocketed to new all-time highs on the Federal Reserve's balance sheet. Where were we last week? $8,564,943,000 in debt. Just before the financial crisis, we were at, right back here, $800 billion or so, just shy of $900 billion. This is only going higher. So if you're not long of gold, if you're not long of the gold miners, think about it. Consult your investment professional. Make sure it's right for you. Jody, geez, it's like admitting a crime no one knew has committed. Yeah. All right. Currently, the ones in the get out to book 60% gains, park the money. Yeah, what the Warren Buffetts of the world do is that they live off of capital gains. They live off of the capital gain. They pay the capital gains tax, and they don't pay an income tax. They're not stupid enough to pay themselves a salary that they have an automatic contribution made to the federal government week after week after week. They're not that dumb. They don't need to do that. Moving on. All right. So, as mentioned earlier, I did a video on DWAC. We did a trade on DWAC on Thursday and closed it out on Friday. We bought in on the 21st at 28.93. We sold on Friday 157 spot 50. Total return 444%. So I don't expect that to happen every single time, folks. And it certainly doesn't happen all the time. So I'm not trying to say that that's what we do all the time. But this is the trade. We are looking to get back involved with it. So speaking of the SPAC, I want to talk about the warnings as well as the opportunity here. So I warned in the commentary I did earlier that you're going to have the big news media outlets gunning for the president's new business. So the good side is the richest he has ever been. Since he left office, his net worth has declined dramatically. That brand, the Trump brand on real estate, has declined dramatically. So within the span of 24 hours, not that he's worth $8.2 billion, but the valuation of the company is at around $8.2 billion now. So that's pretty good. And you can already see the Bloombergs of the world coming out, and they're going to try to beat him down. Bloomberg coming out that there's no clear business model. They don't have enough tech experience. That they're going to get that. They're going to get that. It's going to be difficult. It's certainly not going to be easy. So just expect more attacks on everything related to this business. It's going to come hot and furious. The Republicans are afraid of him. They don't like his dominance over their party. He is not one of them. The Democrats do not want him to have a platform from which to beat them over the head like a baby seal. So more to come on this. And we're going to talk about, let's do it now since I'm talking about it. And I don't forget, by the way, folks, we're sponsored by TrendSpider. Automate your technical analysis, speed up your accuracy, improve your accuracy, and speed up your technical analysis by using their trade alerts functionality. Reduce costly analytical mistakes, find winning chart setups, and time your trades with precision. We will be using that right now as we plot out how we want to enter or re-enter our trade of DWAC. So take advantage. If you watch us on Twitter, link above. If you watch us on YouTube, link below. Go over to their website, discount code 35CON, TrendSpider. And I also give it away free to our silver and gold level members, TrendSpider. Here you go. Silver, gold, TrendSpider free. Let's go to the chart. of DWAC. Now, the game plan here is we want to buy the dips. We don't want to chase it because chasers get met with sellers at some point in time. And I went over this chart earlier. A perfect case in point, GameStop. You know, if you chased it up here, you got hammered to down here if you held on that long. You probably didn't. This was probably marginable back then, but I'm sure that DWAC is not going to be marginable. So be very, very careful. And if there are options set to be released tomorrow, you're going to see a lot of volatility. You thought this was volatile last week. You ain't seen nothing yet. So just take note of prior meme stocks, and no doubt DWAC is the new meme stock, and it's going to get played with quite a bit. Just reflect back. It's easy to think GME, GameStop, did nothing but go up. That's not true. A ton of volatility in here. Don't forget this chart. Okay. It hit a high back in January of this year. It never went back up to that high. So please be very, very careful. Don't get lured in to the Wall Street bets of the world and they're pontificating. So how do we want to play GMAC? Well, we're going to be very conservative. Hopefully they do issue GMAC. What is this? If I said GMAC any more than one time, I apologize. I'm thinking about GM, DWAC. Sorry about that. Okay. Keep in mind that they are going to dilute these shares at some point in time. So that news will take the shares down. They'll probably do it a few times. So how do we want to play it? What I want to do, I've already set up the alert here at 49.64. I want to see a filling of that gap. So what I might do is if they issue options on DWAC, I may sell a naked put, meaning I'm going to accept the obligation to take those shares if by expiration the shares are, or the price of the stock is trading at or below $50 per share. But the premium that I'll take in will bring me down to below where the support level is. I'm going to leave some sensitivity and again, I know people hear puts and they think that I'm betting against the stock. I'm not. It's actually when you're the seller, when you're the banker, when you're the casino, and you're selling them, not buying them, you're actually a bull on the stock. But all you're doing is you're bringing in cash flow and you're offsetting some of, you're basically averaging down your cost. So our alert is set here. We're looking for around $50 per share. We want to see a filling of that gap. In fact, I'm going to set up another alert here. I want to know when we break support, because this support level is interesting as well. 67.80 is another support level. And I'll bet you a nickel that if we break and close down below 67.80, we're going down to $50 a share. I'm not sure if they're going to have weekly options on this or what. Hopefully so. And the beautiful part is that if it doesn't hit $50 a share, well, at least we collected our premium and we're good to go. That's DWAC. Tom, 67.80 or $50. My best $50 for DWAC. Yeah, I agree. Yep. Okay, let's move on. Earnings from last week. We had a really good week last week. I mean, killed it. Netflix earnings we played. We used an option strategy called a strangle. We did very, very well on that trade. I think it was like 90% profit. Tesla, we nailed that one too. We did very, very well on Tesla. Also using a strangle strategy. We did not. I was tempted to trade Snap, and I said, you know what? Tesla's doing so good. I'm just going to continue to roll up my put side and just generate cash flow on it. And that worked out well for us. Thank God we didn't get involved with Snapchat. We probably would have been underwater on that trade, so we did not get involved. You want to stay with liquid options, right? These Snapchat is a speculative bet. Not that Tesla is not speculative, but it's less speculative than Snap. So moving on to the new trading week, I have over on, I'm going to send this into the chat area. I have a poll running right now of which trade we should make on Tuesday night. We have a bunch of them. I can't do all of them. I don't have enough buying power. AMD, Microsoft, or Google. So there's a poll in the chat box. Let me know which one you think we should do. We're definitely going to be trading Facebook as long as we get the premium that we need. They have to have enough implied volatility in the options. We'll be trading Facebook into earnings. I would not be buying these stocks, any stock in front of earnings. We will be using a option strategy called a strangle. That's a simultaneous sale of a deep out of the money call option and a deep out of the money put option with the same expiration date. Later in the week, Twilio, we traded that last quarter, did very well on that one. Then we're going to be trading Amazon on Thursday. We're going to have a busy week this week. MicroStrategy is an interesting one. I'm probably going to go with Amazon, more liquid than MicroStrategies. For those not familiar, MicroStrategy is very heavily invested in Bitcoin. So I'm sure those option premiums are going to be really, really fat with implied volatility, but I prefer to go with Amazon. Moving on, economic data. Nothing coming out on the 25th. Tuesday, though, consumer confidence. We're going to get the Case-Shiller home price index. We're already at new all-time highs. We're already there. We'll see whether or not we make a new higher high. Durable goods on Wednesday, very important number. The durable goods are your washing machines, dryers, etc. They're probably sitting off the coast of California right now. So they're expecting a decrease of 0.0% on Thursday. Initial jobless claims. And we're going to get All right, are we still live? Sorry about that. I think that was my internet connection. Okay, so I'm not sure where I got cut off there, but on Thursday, initial jobless claims and GDP. Friday, disposable income, core inflation. This is not the CPI. We're going to get the Chicago PMI Purchasing Managers Index. Any read above 50 is a sign of expansion, and number below 50, sign of contraction. We're also going to get the Michigan Sentiment Survey, important numbers, an important week worth of economic data. Moving on. I'm going to skip this. I ran out of a lot of time here. There's a lot of requests to go over. Let's go to chart requests. Guys, you gotta, I lost all the chat. So if you could re-enter your symbols, I'd appreciate it. I lost every single chat that there was. Okay. I know GE was one of them. Let's go to GE. Okay. So GE. I haven't looked at GE in quite some time. Excuse me. I'm liking it. Excuse me. Let's this is not my standard. That's my sandbox. Let me go into my standard workplace and bring it up there. Okay. So GE monthly time frame. Let's swap out RSI for stochastic. Multi-month consolidation on GE. I think we're very close to a breakout on GE. Weekly chart. Weekly chart, they're struggling. I think that if we break out above 103, they must have done one heck of a reverse split on this one. No sensitivity. We don't care about sensitivity on a breakout. We want to know if we close above 103 per share. Now, another strategy to do here would be if you're waiting for the shares of GE to break out, well, you definitely have a base formed here. So in advance of earnings, what you may want to do, if you like the stock, no matter what earnings are, you're going to buy this stock come hella high water, wait until earnings, because the implied volatility of the options are going to expand because speculators are going to be in there buying up the options. What drives implied volatility? Speculation. So let them spike up the value of those options. And what I would do is I would sell a naked put. So let's say you like GE right here, right now. Where did it close? It closed at 104.05. Now you have support right down here at, let's call it 101. Okay. Let's say 100 strike. You sell a put at a 100 strike. You bring in a credit. You bring in a premium. If it's assigned to you, great. You got the stock at a discount rather than buying right here, right now and hoping that the shares go up higher because you're in the middle of a trading range. So that's my play here. That's what I would do. I would watch earnings. I would sell a put into earnings right at that 100 strike price. And if it goes up after that, well, you still get the credit for the premium paid to you. And if you want to buy it on the breakout, so be it. Buy it on the close above 103 per share. GE looking good. Daily chart. So we got hammered on Thursday, a rejection at resistance. These are the automated trend lines, folks. You could see, though, the line in blue, the algorithm's picking up a support level. So another place, if you don't want to do the option trade, or if you wanted to use a tighter strike, you could set up a put option sale at 105, right where you have support immediately below. This is what the algorithm is telling you. And there we go. Our alert's set. GE looking good. Looking good. But I would use a little bit of finesse. I wouldn't pay retail. I would try to get it at a lower price using options. All right. WGO. Seymour Rivers. Is that your real name? WGO. Winnebago. Oh, Winnebago. Good company. Franklin, Bob, great effort to set us up for success and a great week ahead. Thank you. My pleasure. And I'm looking forward to it. It's good to wake up and feel happy about going to work. WGO. Ow, this chart's under pressure. All right, let's take the automated trend lines off for a second. Get a feel here. I like to pop the automated trend lines up after I've digested the chart a little bit. There's resistance up here. We got support down here. Okay. This is a good company. So we're in a wedge formation, monthly time frame. Weekly chart. They tried to take it out and above resistance the week of September the 27th. Rejected. What I would do here is this. I would wait for a retrace back down to the support level at around $65 per share. I'm not sure if it's optionable. Another strategy would be to sell a 65 put, generate some cash flow. We love free cash flow at the Contrarian Trader. Let's take a quick peek at seasonality. Let's go to a monthly view. Let's hide this. All right, so this one goes back to 2017. There's more data than that, yeah. This is not the best month of the year. It's one of the it's average for the week, for the year. November, though, really picks up nicely to 67% of the time it closes up on the month. So this pullback this month, maybe a good opportunity. Let's go to a shorter time frame to see whether or not that changes at all. October's gotten better, shorter time frame. November's gotten better as well, so up 70% of the time over the past 10 years. So from a seasonality standpoint, it looks pretty good. So wait for support to get hit, enter there, and then once we break out and above resistance, you add more. And we're good to go. Daily view. Yeah, we're going to go lower here, and that's fine. Stokes are setting up for a potential double bottom setup. Love to see that. Watch that $65 per share mark. Looks very, very attainable, and that's probably where it's going after putting in a bearish key reversal bar on Friday. Coinbase, of which I sold way too early. We made money on it, but we left some money on the table here. So monthly chart, Coinbase, nice rally along with Bitcoin. Keep in mind, though, it trades pretty much with Bitcoin. Now, you had the BITO, that ETF, come out. They bid up Bitcoin trying to goose up that ETF. So just be careful of a potential sell-off. In fact, let's see what Bitcoin's doing here. It's for the most part flat. You can see that it's losing momentum here. Right? We're putting in lower highs and lower lows now. So I suspect that we're probably going to get some selling along with Bitcoin on Coinbase. Weekly chart. You can see I had an options trade here not too long ago. Nice rally. I think what we need here is a retrace. What the heck was that? Back down to a support level. It could be a retest of 271.36, which is the low of the month, and or it could be a retrace all the way back down here, assuming that the market comes under pressure, all the way back down to 257 per share, around there. It's a very volatile stock, so it's achievable. So would I go chasing? No. I would allow for a retrace. You're going to get it. It's had a heck of a 3-week run. It'll pull back in some form or fashion. 271 would be the first point at which I'd be looking to buy it at. Daily chart. Nice price action on Friday. Yes, we closed down, but we closed at the lows of the session. Volume was about average. So this is not a horrible chart. It could press up higher. Would I want to buy it? Probably not. Again, I like to get stocks on discount. So I would probably be anything. I'd be looking to sell a put at the 294 strike, 295 strike, that rounded up. And if it gets assigned to me, great. If it doesn't get assigned to me, no worries. I collect the premium. So either way, I'm doing okay. I achieved my goal. So that's Coinbase. Let's go, Brandon. Let's go, Brandon ETF. I would be all over that ETF. Just give you all a hint. They make med buys. Oh, this is GE. 25 countries, not all GE. Gotcha. PHUN. Oh, I did see this one. Yeah. I saw this one. I took a look at the chart. You may have even asked me to take a look at it. Somebody did. Yeah. Let's bring it up. I don't want to tease and not PHUN. Are we back live again? Hopefully I'm back here. Sorry, folks. It's on my end. My internet keeps cutting out. My apologies. Sorry about that. All right. Let's take one more. PHUN we did. Hey, Pat. How you doing, pal? All right, folks. Oh, are we getting sensitive? I don't know. Could be. Could be. Pay those bills. Yep. It's Halloween. Yeah. Hey, Anthony. Pat, I did do DWAC really quick. If they do issue options tomorrow, that's what I understand they're going to do. I don't know that for a fact. DWAC. I'm going to be looking to sell puts at around the 50 strike. I want to see a filling of this gap. So if they get assigned to us, great. Hopefully they have weekly options. But if we pull back, I want to see a filling of the gap at around $50 per share. And we'll look to get back involved at that point in time. If we see, I'm not going to chase a rip up higher. I'm not going to do that. It's not what I do. We'll wait for a nice setup to occur. If it doesn't come down here, we'll wait for a better setup. Simple as that. 3 reasons to buy silver, AGQ, of which we are long. Larry, yep. October through February seasonality, good stuff. Expanding solar panel demand, didn't know that. They're in solar panels, huh? Well, it's in solar panels. Undervalued gold to silver ratio, yes. It's been that way for a long time now, yes, no doubt. Pat, am I still in? No, I booked profits, 157.50 per share. We got out of DWAC. We're looking to get back in, though. DWAC issued the options strike to 150. Oh, so they have the options chain up there already? I'll check it out. I was fortunate I bought 15,000 shares of PHU in one. Wow, congratulations. Multimillionaire. You think it opens up at 100? I wouldn't be the least bit surprised. Facebook, we'll leave it off with Facebook. We're going to trade Facebook on Monday on an earnings trade. Again, folks, I don't buy stocks into earnings because that's way too speculative. But we do open up strangles. And we will be doing the same with Facebook, assuming that the options are paying us enough to take the risk. Now, on a monthly time frame, we have broken a long-term uptrend on Facebook. Now, that doesn't mean that we can't rally back and try to recapture prior support, but it's probably going to act as resistance. Weekly chart, rough week last week. I mean, they tried to rally it. It was rejected. Daily chart. It's hanging on by a thread. This is a critical support level. You can see they have an alert that's expired here. I'm going to set up a new one. So Facebook is under a lot of pressure, a lot of pressure. Yeah, Randy, we're going to be in on Facebook. We're going to be selling strangles on Facebook. Major manipulation of Facebook in the last few minutes on Friday. They really wanted to close it at 325. Where did it close? 324.61. Options expiration probably. All right, folks. Look at NEO. All right, we'll leave it off with NEO. NEO, monthly chart. We have a breakout on a monthly time frame. 33.59 is critical support. But keep in mind, we do have a lower high here, potential double top. Stokes are losing momentum, and they are. The fast line anyways, down below the 50 mark. That's a bit of a concern. So the month is not over. So this breakout is not in the books yet. Weekly chart. We have a weekly breakout. A retest of support. First off, I would never buy this stock. Chinese stock. You got this Chinese Communist Party as your senior partner. I don't want anything to do with that. But if I was going to buy it, I'd wait for a retrace back down to these support levels, increase the sensitivity some to encapsulate not one support level, but two. Touch, bounce, breakthrough. Keep it active for a couple of weeks, and we're good to go. Daily chart. Reversal bar on Friday. I mean, it looks as though the lows of Friday are going to act as some support. Low 38.54. You could take a crayon out, draw a trend line. We're probably going to consolidate in this range. Look for a breakout above. I hate when they do that. A breakout around $39 per share on NEO. All right, we're going to leave. Diz, you did ask for that one. Disney under a lot of pressure here. It's not broken, but it's got trouble. We closed down below 167.80. Disney's in a lot of trouble. Have they reported earnings yet, Disney? This chart is not looking good. Weekly chart. We had a multi-week consolidation, and last week we broke it. Stokes are weak and getting weaker. I would avoid this. I think it's going to break. Earnings 11/10. November 10th to earnings, folks. Thank you very much for that. Sis. I don't know this company. Sis. Shineco. No bueno, pal. Bearish key reversal bar on the month so far. Doesn't mean it's going to close bearish. Maybe it'll rally back. But the price action doesn't look good. Reversal bar. You have a lot of sellers above. Weekly chart. Again, a lot of sellers up here. Got to get above that resistance level. I don't want any sensitivity. We're very strict about that. A breakout's got to be a closing breakout. Is this the right chart? Sis. No, it's the wrong chart, dummy. Either way, SISI, don't buy. I typed in the wrong symbol. Why is the symbol not coming up? Sis is not coming up for me. I'm not getting it on my charting software. All right, we'll leave it off with glop. For Pat and his glop. Wow, nice. Very nice. Monthly chart, looking the bomb. Bullish key reversal bar on the month. Weekly view. We broke out last week. Watch for a retrace. Keep some sensitivity on. This is a very volatile stock. Good looking chart. Daily chart. Whoa. Damn. Resistance up at 540. We're trading above the third standard deviation Bollinger Band. We don't want to be there. You're not supposed to be there. Me personally, I would watch for a retrace back down here. A retest of the breakout point. Very bullish. Glop. And Tom. Oh, and it was Diz. Okay, gotcha. No worries. No worries, pal. All right, last one. This time I'm for serious. No doubt about it. This is the last one. No doubt about it. NFGC. Good one to leave off with. Gold company. Looks good. This is a monthly chart. Very close to a monthly breakout. I'm sure we have a weekly breakout. You bet, Pat. Anytime. Weekly chart. Yeah, we got a weekly breakout here. This is a buy. Newfound Gold Corp is a buy. I'm very, very bullish on the gold mining stocks. Very nice. If you get a retrace back down to support, keep a little bit more sensitivity. And there you have it. Daily view. It's walking that line, man. It's just holding that lower band of support. I think it's gonna it's just gonna lift off. So it may have some backing and filling here, but I think that these gold mining stocks are ridiculously undervalued. Me personally, I wouldn't buy an individual gold stock. I don't know much about them individually. They have a lot of fly-by-night operations out there. I would stick with ETFs. That way you're protected by a manager and take that route. But these names are going up higher. Don't forget, you have an FDIC commissioner out there telling you don't take money out of a bank. You have 3.5 trillion plus another 1.5 trillion going to be spent into existence, but they're not going to raise taxes. Where are they going to print it from? The Federal Reserve. What's that going to do to inflation? Through the moon. So if you're not long of these gold stocks, think about it. Consult your investment professional, but think about it. And we generate cash flow on them as well using the NUGT. And with that, oh, Kat, you nailed me. All right, last one. Oh, hold on a second. Eric Sprott just paid 48 million. Sprott's very, very good. Very, very good. For 5 million shares of NFGC. Hey, if he's buying it, it's fine with me. My hat's off to him. I bet he knows what's coming down the pipeline. Yeah, no doubt about it. No doubt. I think we all do, really, right? You know, you have ships that are sitting off the coast of California. Inflationary, shipping costs through the roof. The cost of goods on land going through the roof because you have stuff sitting offshore. And this is all intentional. Why haven't they re-diverted these ships through Florida? You've only heard that start getting talked about today. And I wanted to bring this up. This is the reason why I had this article up. Ryan Peterson, Chief Executive Officer of Logistics at company Flexport. This guy took a tour. Peterson said he had hired a boat captain to tour Los Angeles and Long Beach ports, which account for 40% of all shipping containers entering the United States. Think about that. He said that during the 3-hour loop through the ports, passing every single terminal, we saw less than a dozen containers unloaded. This is all, if it's not intentional, it's in complete and utter incompetence. Pick your choice. But to me, it seems as if it's intentional what they're doing here. So what are we going to do? Gold stocks. Bet against the Fed. Become your own Federal Reserve. All right, leaving it off with Kat, hopefully, unless you guys sandbag me again. Leaving it off with Kat. We broke out last week. Daily chart. Nice. They're pulling it back. Look for continuation breakout. What the hell? I am being technologically challenged all day today, in fact, now that I think about it. Nice bull flag setup forming here. Caterpillar probably going higher. In fact, let's check out seasonality. Going back 11 years, October up 64%. November is the best month out of the year. Seasonality, very strong. Caterpillar, bullish. With that, folks, everybody have a great night. Thanks for joining in and have a profitable trading week. Be well.